A massive stock market crash is coming in June, and that's because of Donald Trump's announcement that he's going to impose a 50% tariff on the entire European Union. And as Trump himself says that European Union was created to take advantage out of the United States. The European Union is the largest trading partner of the United States, much larger than Canada, Mexico, or even China, where there was a huge trade imbalance between the two countries. And the trade between the United States and the European Union is almost $1 trillion, which makes it the largest trading partner in the world. So any kind of a trade war between these two continents is going to have devastating implication on the entire stock market. So here in this video, let's explore what are the chances of this trade war to have serious implication on the stock market, which stocks are going to suffer, which stocks are going to grow, and how long this trade war is going to last. So if you're ready, give this video a thumbs up and let's get right into it. It's true that the United States spent hundreds of billions of dollars helping and supporting the European continent, but it wasn't out of generosity. After World War II, where most of these European countries were entirely decimated and destroyed, the United States was afraid that they will be under the influence of the Soviet Union. So it was much better for the US to provide all of these loans to these countries and help them to rebuild them. And in exchange, the United States got political allies, trade partners, and countries that are under the influence of the United States and not the Soviet Union. Eventually, European countries created the European bloc, and today their economy is almost as large as the economy of the United States, and they can stand up to the United States, China, and Russia. In fact, if you check it at the purchasing power parity, then the GDP of the European Union is almost as large as the United States. So bullying the European Union is not going to work, just like the United States bullied the UK into signing such a horrible trade deal. I still can't believe that they've signed that. But the real question is that, is the European Union actually taking advantage of the United States, just like China did over the last 20 to 30 years? Now let's take a look at the numbers. The United States sold to European Union $347 billion or euros worth of products. On the other side, European Union sold to the United States 503 billion euros worth of products. So that leads to both countries with a deficit of $156 billion. So European Union is literally selling to the United States over 150 billion euros more of products than they are buying from the United States. It means that Trump is right and there is a huge trade imbalance and huge tariffs must be imposed in order to correct this problem. But this is just part of the story, because countries don't simply sell to each other cars, engines, and trucks. There are also services such as banking services, digital products. What do you think Apple is selling besides iPhone? iCloud services, Apple Music subscription? What does Amazon sells? Digital products. What does Microsoft sells? Digital products. How about Meta, Facebook, WhatsApp? How about Google that sells hundreds of billions of dollars worth of ads to the entire world? So if we consider services, in 2023, the European Union imported $427 billion worth of services from the United States, while they sold to the United States 318 billion euros worth of services. That means that the European Union purchased from the United States over 108 billion euros worth of services than they sold to the United States. If you take services into account, suddenly it seems like they're almost buying from the United States as much as they're selling to the United States. Sure, the EU is not buying as many American cars as Americans are buying BMWs, Mercedes, Volvos, and Volkswagens, but the European Union is also not selling to the United States digital products such as what Meta and Alphabet is selling in the European Union. But let's be fair, even if you count all the numbers, there is still a trade imbalance of $48 billion. So it means that Trump is right. I mean, think about it for a moment. The total trade between the EU and the US is over $1 trillion. What is $48 billion? It's less than 5%. And you can fix it by tweaking the system slightly, not by imposing a 50% tariff. And secondly, the US is acting like the big brother in these relationships, and it's trying to project some soft power. So if you can swallow $48 billion worth of trade deficit with your most important trading partner, then what kind of soft power do you have? But the question is that, will that crush the stock market in the US? If you take a look at the entire market in the United States, the stock market, top 10 companies represent almost, if not more than a quarter of the entire equity market. So companies from Apple to Amazon to Nvidia, all of them combined represent almost $17.8 trillion. And a huge chunk of their sales comes directly from the European Union. Let me give you some examples. Apple, 26% of their total sales, or over $100 billion, comes directly from EU. Microsoft, 29%, Amazon, 22%, Alphabet, 30%, Meta, 24%, and so on and so forth. So if the United States is imposing a 50% tariffs on EU, and then EU retaliates by imposing a 50% on everything that comes from the EU, and that includes services as well, what do you think is going to happen to the revenue of these companies that represents almost a quarter of the entire stock market in the US? It will reflect on their balance sheets, on their financial statements, which means that it will reflect on their stock prices, and their stock prices are going to go down significantly. Tesla might not be hit a lot because Tesla produces their cars in Germany because they have these gigafactories. But how about Google? How about Meta that sells, they're literally selling hundreds of billions of dollars worth of ads to multiple businesses, I would say millions of businesses across the entire European Union. You impose a 50% tariff, there is a competitor that is going to get into the game, and Meta is going to lose the entire EU market forever. And if that's the case with the largest companies in the US, what do you think is going to happen with much smaller companies where they have a huge chunk of the revenue coming from the EU? But these tariffs are not going to have any kind of immediate impact. Even if they impose the tariffs on 1st of June, it's not going to instantly have impact on the businesses. But that's not how investors think. If I as an investor believe that Amazon sales are going to plunge because of these tariffs, then that is going to be reflected not in the next quarter, but maybe by the end of the year, maybe by next year. But I want to avoid those losses, which is why I'm going to sell my Amazon stocks right now in order to avoid those losses, which is why there is going to be an oversupply of those stocks in the market, and a weak demand is going to lead those stock prices to plunge. That's how investors believe, and that's how investors act usually, which is why even if they're going to come up to some kind of agreement a few months from now, the stock market most likely is going to have some kind of an impact. There might be a correction of 5%, 7%, maybe 10%. But on the other side, we have to understand that investors already understand how Trump works. Yes, Trump can come out and give some huge announcement about some kind of huge tariffs, but on the other side, there might be an agreement next week. Take with China. There has been tariffs up to 245%, but now tariffs are posed for 90 days, and there are exceptions for smartphone, electronics, computers, tablets, and almost everything that comes from China. So investors are very cautious, and they expect something like that to happen with the European Union. That's why they might not be rushing. Even if there is going to be a correction, that correction might not be huge. On the other side, we have to understand that the EU is not going to simply back down because they don't see a problem. Yes, there is a $48 billion trade deficit, but we can fix it with some tweaks and not by imposing such draconian tariffs on each other. While the EU has huge tariffs on agricultural products because they're protecting their farmers, they're having almost a 20% tariff on ethanol and a list of other agricultural products that makes it harder for American farmers to enter the European Union's market. But on the other side, there are zero tariffs on financial services that JP Morgan sells. There are zero tariffs on digital services that Alphabet and Meta sells. So they don't see a problem in that. But Trump is solely focused on physical products, especially agricultural products. But then the EU can hit the United States in the back with a 50% tariff on all the services that are being sold. And frankly speaking, services worth a lot more than agricultural products. So it might be far better for the United States to simply lift all of these tariffs and subsidize farmers in the US. And that could be a far better option. While I do believe that there is going to be a deal reached between the two countries, it's going to take some time because the EU is not going to back down. And frankly speaking, based from what Trump is talking about the EU, I think he literally believes that the EU owes the United States a lot and they've been taking advantage of the United States. But that was the political will of the United States and not the European Union, because they wanted the EU to be under the influence of the United States. So no matter how bad the crash is going to get, I'm not going to sell my stocks because I believe that this is going to be a temporary correction. In fact, I believe that this might be literally one of the greatest times to buy because it's literally pump and dump. You have to understand that the EU has a lot of leverage over the United States. Right now, they're buying a lot of energy from the United States. So by imposing a 50% on energy products on the United States, they can literally turn around and say, Russia, we missed your gas and oil. Please bring all of your gas and oil to the European Union, and they'll stop buying the American oil and gas, which is a huge problem. It will cost the United States much more than they could potentially make in agricultural products selling to the EU. Second thing, they can clear the path for Chinese tech giants to enter the European market, and that could have a long-term influence because once they enter the European market, they will have a serious competition with Facebook, they will have a serious competition to Alphabet and Amazon, and now it's not something that you can wipe out easily. Right now, they have an upper hand, but if they clear the path for Chinese tech giants, it's going to be a disaster for those companies. And that's something I believe is not going to happen. They will hold that card until the end. It seems like this is literally like a pump and dump that happens on the level of the government, that the entire White House is literally pumping and down the entire market. And that is what? That is an opportunity for you. That is an opportunity for me to buy some of these stocks at a bargaining price and then profit enormously. Now, if you have been part of our academy, you would have seen that and you would have prepared yourself for this and you would have taken advantage. This is not the first time that you could take advantage. Literally, the last 3 to 4 months have been some of the best periods that you could have invested and made a lot of money. If you have been part of our academy, you would have seen that and you have already made a bunch of money. Now, for those who are interested to join our academy, there is a link in the description of this video and a comment that is going to be pinned. You can check the link and find out more. That's it for today. Thanks for watching, and I will see you in the next one.